you got something fun to say?
Nope, let's go. Let's hit it.
All right. We just got some 2023 end of year data. So this is home sales by month. And I left 2022 on the screen for comparison. So December came in just under 5,000 home sales, where December 2022 was just under 6,000. So that's about a 20% decline in December. I say that not from a negative sense. I actually think the end of the year was just a little bit slow because I think people are anticipating interest rate change, and I'm expecting that to really kind of kick in now, really in January.
Yeah, I think the rates started to dive down just as the market was cooling off for the holidays. So as people were losing their focus on real estate and focusing on other things, that's when rates dipped down under 7. So I think the first of the year, I'm seeing a lot of activity now from people that were sort of put everything on hold over the
Yep.
holidays now that rates are better.
So we don't have the annual numbers just yet, but we're still on the monthly. Um, Median sales price. So the way the median sales price in Atlanta is landing at the end of the year, about a 1% price appreciation for the year. I think that is a general statement. I think there are price points and markets that experience different results than 1% price appreciation. Yet, if you're looking at Metro Atlanta, 1% up is probably a win. With
Definitely. Well,
as crazy as 2023 was, Mark, I find that a win.
if you remember back at the end of 2022, there were a lot of predictions that the market was going to go anywhere from flat at 0% to negative 5%. So for Atlanta to be 1% positive across the board, I think that is a win.
That's a big win. Now it's drastic different than what we were experiencing and what historically we've seen.
Right.
But the question is, where will 2024 land? Uh, let's get into that here when we get to some of these other stats.
Okay.
But median sales price, that one's not updated yet, but the FMLS median sales price landed at 377 at the end of the year compared to 374. That's your 1%, right?
Right.
You'll see it right there. But the purple line is that 4% trend line. And if you pull that trend line out, we're still above trend of a 4% price appreciation long term.
Right.
And uh, what do you take from this? It's a sound investment to buy and own real estate, period.
Yep.
It always has been, always will be. So if people are worried about pricing, I would be pulling these two slides up uh, and showing them, hey, historically, the value of that asset you're buying is going up. Even if it went down like it did in 2011 and 2012 for a short period of time, historically, if you, as long as you don't sell in the down 2 years, the value is always going to go up. Um, I'm just going to hit a couple of these other things. Inventory by month, we're sitting at around 4,993 units active inventory at the end of December. But days on market tells a very different story. So if you look at the beginning of the year, we're the blue line. The year before us was the yellow line. Um, there was a big gap at the beginning of last year from days on market compared to that fast pandemic market. But
Mhm.
it sure looks like by about August, we caught up and we're trending the same.
Mhm.
Now, we sold less houses in December 2023 than we did in 2022. Yet look at the difference in days on market.
Right. Fewer houses to sell this past year, but what was there was selling and selling quicker than the previous year.
100%. Remember, this is a relationship between supply and demand. So even though the house number is down, the demand number came down because of interest rates. So it's the relationship that determines this number. And one of the things, Mark, I would talk about, let's get this chart up here real quick. So historically, end of year, days on market's high, summer months, days on market's low, high end of year, low summer, high, low summer, pandemic. We had 30 days on market at the beginning of last year. We
Right.
went down to 11 days on market in the summer, and we're back up at 22. So what does that tell us? What would you predict from that data?
I mean, I feel like it's going to keep trending in the same direction. So I think it's going to be, you know, as like it closer to like it was pre-pandemic.
Yeah, I agree. I think of this like a race car on a track, and the race car has to slow down on the turn and then they speed up on the straightaway, right? I think
Right.
most people understand that analogy. Well, the turn of the year, meaning December, January, is the curve, and the market slows down for a period of time. And then now the car is on the straightaway and it's speeding up.
Hmm.
So, what we expect to happen is just like last year, the market is going to speed up to the summer months, and then it'll start to slow back down in the last half of the year from a days on market perspective. So
Right.
then what do I do with this information? Well, one, um, conversations and expectations with your clients is very paramount to success as a listing agent. It's also it's good to know from a buying agent perspective because what's too long on the market, Mark.
Well, that's relative. But within the first couple of weeks, you're going to know if the property's overpriced. I would say in the first 2 to 3 weeks, if you don't have a solid offer and you have fewer than 7 showings, then you're probably overpriced.
Absolutely. So anyway, this chart, so back to normal, which I'm excited about. Normal's good. But 22 days on market is still crazy low.
Yeah, I mean
Um,
that's what I wanted to point out, Brett. If you go back to that slide for just a second,
yeah,
um, 30 days is the worst it was in the past, what, 3.5, 4 years.
yeah, since 2020.
And so that was only 30 days, which, if you look in January every other year, and prior to that, it was 35, 34, 37, 36. So we are getting back to normal, and we need to stop comparing days on market now to days on market during the pandemic and start comparing it to the normalized market prior to the pandemic, because that's kind of where we are.
Absolutely. And it's super healthy. And I want to point this out for a minute. If you look at annual supply of inventory, right now, greater FMLS was at 2.3 at the end of the year. Greater Atlanta, which is a tighter geographic area, was at 2.2. And I should listen to this number in terms of what my predictions look like around pricing. So if a house or if inventory is at 6 months, that's what the experts call a balanced market. Um, but if a house is only sitting on the market 30 days, are you going to discount the price that much?
Probably not. That's typical.
No, that's typical. And in some price points, you're probably going to still experience multiple offers, which that's going to create that upward trajectory of pricing for us in 2024. I
Right.
think that's important to understand. And then you'll see I'll pull out 21. Uh, Once again, there was a discrepancy at the beginning of the year, but we're now trending, which why I think that's an important thing for us is uh, I think as real estate agents, there's confusion when the current market feels different than what we were experiencing. Now it feels the same to what we were experiencing.
Right.
So you should be your conversations and your expectation settings should feel pretty normal now. And if they're not, maybe that's a self check going, hey, I need to set better expectations with my clients or stuff like that.
Hmm.
So 2.3 months, that's 60, 70 days. So to me, if I'm a buyer's agent and I'm looking at a property in the, you just call it $500,000, $500,000 range, and it's been on the market 80 days, yeah, I might be able to be a little aggressive in my offering. But if I'm looking at a property in the $500,000 range that's only been on the market 40 days, I probably am not going to be able to be as aggressive from a negotiating standpoint. It's
Right.
important to know that so you're positioning your offers and your buyers and setting seller expectations accordingly.
Right. Well, it also depends on, every area is a little bit different and, you know, how long the property's been on the market and how it's priced compared to where it should be are going to play into that as well.
Absolutely. Um, and then that's new construction, unemployment, GDP. So GDP is landing around 3%. We were really high during the pandemic. And when the pandemic hit, the economy was slowed temporarily. So it went backwards. And that's what this was. But if I don't know about how many Amazon boxes are showing up at your houses, but I know what the spending habits of people in Atlanta went sky high, and now it's pulled back to about a 3% increase. That's healthy. The government wants it to be about 2%.
Hmm.
So we're actually spending more than what they consider stable to be right now, which means you probably still have a recycle bin full of Amazon boxes, but probably not as full as it was the previous 2 years, right?
Sounds
And
like you're speaking from experience.
Mark, don't go there. But yeah, we're looking in December. I'm sorry, October. We don't have December's numbers yet. But in October, the inflation rate was around 3%. The government says 2% stable. So we have a love-hate relationship with all the stuff the government did around interest rates and slowing the economy down. But you could rest assured it worked, and the inflation's back in check. We actually expect the Fed to lower the Federal Reserve rate in the future. So, from a stability from an economy standpoint, we're almost stable. And as a real estate professional, why is that important? It means we don't have an unknown going forward. We're in a period of known, and it can only get better, if that makes
To
sense.
that point, the unknown is going to come around September when the 6 days prior to the election, the advertising ramps up,
Yeah.
and people get really focused on the election and it creates uncertainty. And there's always a little bit of a pause. So I would just say everyone should be focused on getting as much business between now and August 31st as possible.
Yeah. Front load your year.
Yep.
And back to the race card analogy, like if we've come across around the turn, your foot should be on the gas pedal right now.
Right.
And you should be, some agents, unfortunately, they wait till the year starts and then they slowly start to speed up their activity. And that's a mistake. I believe you need to have your foot on the gas pedal and you need to be moving really, really fast right now. And when we look at active inventory here in a minute, you're going to see why, I believe. Anything else on that, Mark? And
No, I'm just,
population, we don't have
hopefully
numbers yet.
everyone watching has spent the holidays getting in touch with their clients and delivering, Popeyes with gifts and things like that, just to stay top of mind so that they did some heavy lead gen during the holidays that they can take advantage of this quarter.
Yeah.
I have a question.
Yeah.
Maybe I'm telling on myself. So what if you weren't doing heavy activities? You just did some, but you weren't heavy on your activities as you should have been over the last holiday, the last few days. What would be your recommendation as far as ramping it up starting today? You're born again. Today's your day. What's your recommendation? Thank you.
Dive
Yeah,
in.
it's the 5 plan. And here's my 5 plan. You should send 5 direct messages a day on social media, 5 text messages a day, 5 phone calls a day, 5 handwritten notes a day. And if you do that every day for the next 60, 90 days to your sphere of influence and you track it, so you think about that. That's what's that? 20 times 5. That's 100 contacts a week in different media formats. Then you're going to light your database on fire. And if you just followed that simple little 5 plan, um, it's going to turn your world into that race car, and you'll win the race. In my horrible analogy here, but um,
Brett, I
that,
also just threw in the
it's,
chat
yeah,
the January call from Michael Mayer, who wrote the 7 levels of communication. And his January call is pretty great. And you can use this form and just, you call everyone in your database and make the January call. Tells you what questions to ask and gets you in touch with them and in line with what they have planned for the year, so that you can be top of mind for them and they can be top of mind for you, and you can follow up better.
yeah. And Natalie, rest is important. I saw somebody posted that in the chat, Mika. I agree. I tend to try to take the last week of the year off every year just to let my brain calm. But I think it's a mistake to wait too long into January to get the activities at optimum speed. Like, you need to be at optimum speed this week.
You can still call
You
everyone in your database right now and just say Happy New Year, like, and start the conversation off that way. That just isn't going to last very long. So take advantage of it now.
All right, let's look at Fulton County real quick. So we went from 251 active inventory a week ago to 681 active inventory. Now, let's just, that number alone. I have to go back to early December for us to even have that amount of inventory. And before that, it was probably early November. So there's 430 new properties on the market in Fulton County today. So what do I do with that information, Mark? Like, what would you just coach me?
I'd be reaching out to buyers that I'm working with and letting them know that, like, inventory is back up because everyone who let their listing expire at the end of last year is putting it back on the market now, and new listings are coming on. So now's the time to take advantage of more inventory being available.
Yeah. I could simply just call you, Mark, and say, Mark, I know we were looking in December and we kind of slowed down, but there's 430 new active new listings just in Fulton County alone.
Yeah.
Let's get in the car and go look at something.
Yep. Get them out there.
And get there first before everybody else does, and it ends up in multiple offers and all the above. 63 active under contract, pendings at 143, closings at 205. The market's already started, and it's going to do nothing but go up. So let's get going.
Right.
Here's an interesting number. First week of January, 289 expireds, 278 expireds this week. That's almost 600 listings that expired in the last 2 weeks. What do you do with that?
I mean, if you're inclined to call expires and FSBOs, call them now. If you farm a neighborhood, check the ones that expired in your neighborhood and reach out to them, and go on a listing appointment.
Or not. Yeah. Push on it. All right. If I run over to the cab, Mark, say something smart while it's loading.
Say something smart. No pressure.
Yeah, right. All
I
right.
have a fun fact. I lost out on an offer this weekend, and the person that beat me, they bid $20,000 over ask.
Yeah.
So that's bad.
Here's the thing. How long was it on the market?
5 days. They just decided to run it through the weekend.
What price point?
465.
Yeah. That market is going to get multiple offers, and it's going to get hotter.
Yeah.
But I guarantee you there's some of the listings out there that are not experiencing that right now, but will in 2 weeks. So this is the purpose of being there first right now. All right. DeKalb County went from 159 to 367. It's a smaller county, but huge jump as well. 47 active under contract, 86 pending. We got 130 closed. A week ago, they only had 57.
Mhm.
That's a huge jump.
We're back to pre-Thanksgiving
Yeah.
numbers for the cab.
254 expired listings in the last 2 days in DeKalb County.
Yeah, right now is a really good time to be calling anyone that was on hold at all from last year and talk to them about, now we're in that little lull before the market gets crazy again, and it's not going to last long. So let's get out now and look.
Yeah. Cobb County went from 151 to add 201 new listings, more than double in the last 7 days. 54 active under contract, 118 pending, 142 closed, which is a big number for them. And then 100 or 200 listings expired in the last 2 weeks. So what do we do with this information, guys?
And I feel like our job as agents is to communicate what's happening in the market, and especially to the people that are actively looking or have been looking, get them going right now. And for sellers, the more that comes on the market, the more competition they have also. So yes, there'll be more buyers in the market in March, but there'll also be more homes on the market. So they need to take advantage of it as well.
There you go. All right, let's look at rates real quick. So right now, the 30-year fix is at 6.75. That 15-year fixed is almost under 6. So is that a popular loan? It probably could be. At a $250,000 loan amount, what's the difference in payment? Less than $400.
Yeah.
I'm still going to be a proponent of FHA and VA. I think they're great loan products with great interest rates. We
Mhm.
just have to get the buyers and the sellers to understand it. Now, Natalie, in a situation where a house is going $20,000 over, it's probably not a good product. But there's other properties that would be make more sense. And I just think don't discredit the government backed loans because those rates are crazy different. Look at it's a difference of $100 in payment a month to go fixed versus FHA and or VA. So that creates an affordability option for some people. Just heads up. All right. Let's hit some of these. So Zillow, affordability, job growth.
I
Yeah,
have a
go.
question. I'm sorry. Did that include the mortgage insurance on an FHA product?
Yeah.
It does. Okay.
Mhm. Um, Zillow published this article this week. It says affordability, job growth make Atlanta a top housing market this year. I think we know that, but it's important to state that and let people understand that Atlanta is expected to rank the 6th most competitive U.S. housing market this year.
Brett,
That's
where
a
was that?
good
Brett,
and a
where was that
bad thing.
article? Brett, where was that article about Zillow?
I'm on Atlanta Business Chronicle.
Okay.
Um, there's a good and a positive and negative of that. Positive means it's going to be a good market. Negative that means it's not going to be easy. There's going to be multiple offers still. We're still going to fight that battle for a while. But ultimately, this is going to create price appreciation. So while some markets are going to experience price depreciation in 2024, I don't believe we will. I think our prices are going to go up.
I agree with that.
What would you add, Mark?
Yeah, I mean, I think you're dead on. I mean, I think prices are going to hold strong in Atlanta, and I think it's going to be a really busy spring. And I think, buyers are going to have to deal with multiple offers and all of that good stuff. So just be ready for it and take advantage of it.
Yeah. Buffalo, New York. Anybody want to move to Buffalo? That's supposed to be
Mm.
the hottest housing market.
It's inexpensive.
It's inexpensive. I looked at this and I find this interesting that every one of these cities is on the East Coast.
Hmm.
So we live in a great place to sell real estate for sure.
Hmm.
All right. Here's another article on the same thing. Metro area city named sixth hottest housing market in the US. This is on Channel 2's website, WSBTV.com. And I thought there was a chart in here, but maybe
Yeah,
there's
there's a download link, I think,
yeah,
very beginning.
you sent it.
No, at the right under that picture. Nope, scroll down under the picture in the article. See download. Oh,
Right
never
here.
mind. Nope, never mind. I saw the download. I thought that was a link.
Okay.
That's not it.
Anyway, it's same thing. It's just basically saying that we're going to have the sixth hottest housing market in the U.S.
Yeah,
Probably the most desirable housing market, but it may not be the hottest because of price point.
right.
All right, Mark, this is my favorite. And
Mm,
we're gonna high point this one.
yep.
Because it's third party, we can just read it and then we're not jerks for saying it. It's the five things your broker's too nice to tell you, but you need to hear.
So I just want to
Well,
go on the record as saying I think we've been having these conversations,
I agree.
especially on this call, but I think all the TLs and Harvey Atlanta Group have been having these conversations. I don't think anyone accuses us of being too nice. I think we're direct when we need to be.
Yeah. So the first one's the mark's getting tougher, but you're getting softer. Um, Here's just, I'll just read it real quick. It says, we recently came out of a historically hot market. When the market's so good, you can often get a false sense that you're better than you really are. Early in my career, I was taught that a good market can make you look better than you are, and a tough market can make you look worse than you are. The pandemic market made a majority of people look better than they were, and the current market's going to make many people look worse than they are. The key is not to be in the latter group. So, what does that mean? It means exactly what we've been saying. If you're in the game at optimum speed right now, you're going to be in the group that's going to thrive. There is going
Right.
to be a chunk of our peers that are slow to go at this, that are caught up in their head waiting on interest rates to come down, that are caught up in their head waiting on inventory to show up, and they're going to lose. And I don't know how else to say it. You can call it preaching, you can call it being direct, whatever you want to say. You got to be out there doing activities at a high speed right now,
Yeah.
and you will win big because of it. I promise. Just trust
It's
the activities.
I think in the pandemic, a lot of people became reactive because people were coming to us saying, I want to buy, I want to buy. Now it's, we have to be proactive again and buy a lot.
Yeah. Second one's you're blaming other people and things, but with all due respect, you're the problem.
Hmm.
It says if you're struggling right now, you're not a victim of this market. You're a victim of your own inactivity. During difficult times, many agents blame their broker for not providing them with enough support, or they blame their lack of results on higher mortgage interest rates. Uh, yes, all those things exist. Yet, if you're inactive, you're not going to succeed. You got to get out there and be active. You're playing small and not facing your fears. What you're afraid of that would move your business forward if you just push that's the fear and acted on it. Almost everybody's heard the quote that your fears, your everything you want in life's on the other side of your fears, but do you believe it? Um, I think this is pointed. Says, are you insecure about how you look on video? So you've held back on producing video content. Guess what? Everybody's insecure on how they look on video, me included. But successful agents push past that fear and shoot the videos anyway. Are you worried that somebody might perceive you if you started posting more about your business on social media? Post the content anyway. Worried a prospect might get mad and say something rude to you if you called them on the phone? Call them anyway. You've got to push through the fears right now because that's where the activity is.
Yep.
You're reacting incorrectly to adversity. I think this is a mental game. I've had many conversations with agents that they just shut down when the rates went up.
hmm
And that's not what you should be doing. You should be doubling down. And it speaks back to the conversation around activity. And then the last one was you're doing the same thing, expecting different results. That's insanity. I don't know how I feel about this one because some coaching conversations we're telling people to go deeper into what they're already doing instead of going wider. But I do think some people don't have enough lead generation arms that they may need to add another arm. But if you just are doing the same thing you've been doing, it's not going to get you where you need to go. You got to be on it. Mark, I'll give you the last word. We're over 2 minutes.
Yeah, I think it's just, focus on your lead gen activities, no matter what it looks like, and get after it fast and hit it hard right now because the market's got a good opportunity for us for the next couple months.
Rock and roll. Have a good one, guys.